Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're still watching Trading Hour. Well, everyone seems to be interested in milk these days, not so much the other spirits, but let's find out why. Edelweiss has published a report on the dairy sector, and they expect India to be the world's largest dairy producer by 2020. To discuss the rationale, we are now joined by Head of Research at Edelweiss, Aditya Narayan, and author of that report, Shraddha Seth. In fact, Prashant has that report. So, Prashant, you want to just show our viewers?
So this is the report. Nice looking picture. Cows and milk and the entire sort of value chain, really, as we were talking about. I mean, just to quote from the report, and Shraddha writes, and we'll get her in just a bit, India's dairy sector is a very bright, free-flowing opportunity. White and bright free-flowing opportunity. There are some very large numbers. 5.5 lakh crores is the size, and the players, I mean, the organized market is not that large, and there's opportunity for them to grow. We've been kind of sort of talking about this for the last couple of days. We've had a couple of these companies that they are initiating coverage on the air earlier over the last fortnight or so. So let's get straight into the discussion. Thanks very much, guys, for dropping in.
Thanks for having us.
Shraddha, why don't we briefly tell us what the thesis really is in the sector, the opportunity really?
So as you rightly pointed out, the size of the opportunity is huge at INR 5.5 trillion. In terms of leadership position, we are the largest in the world at 160 million tons. So we believe there are strong structural levers which should drive strong 15 to 20% CAGR consistently over many years. So one being, India has a huge unorganized market at almost 80% of the dairy sector. So which potentially means the organized is almost 1 trillion in size, and this will grow at almost 2.5x itself in the next 5 years. This is mainly driven by the fresh dairy products, which are like huge categories itself. Second, the emerging value-added categories like cheese, whey, these are hugely underpenetrated, and these will be like 2.5x itself. And as I said, the categories itself are like less than 1% of the milk procured in India. And thirdly, we have a huge vegetarian population in India at 31%. So milk itself, and it's a substandard protein consumption in India. So milk itself is the largest source of protein. So we believe these are the structural levers which will drive, this market for a strong 20% CAGR for a long period of time.
Okay, Shraddha, just a follow-up there. We were speaking with the management of Parag Dairy a while back. All of us have consumed their products, right? Govardhan, etc. You guys just initiated coverage there. What kind of growth do you see?
So Parag, we believe, has the strongest value-added portfolio. So if you see, 65% of their sales is value-added. This you compare with the industry is just about 35%. Second, in terms of brand, they have created the strongest brands in the country in the last decade, if you could think of. And they have created these brands in record time. So they entered cheese in just last 8 years, and they are already number 2 player with Go Cheese brand. And third, they have invested ahead of the value chain in terms of investments in these highly profitable categories. So they've invested almost 3.5 billion in the strong cheese and whey, which are high margin segments. So that itself is like creating entry barriers for other players because of the scale that they have created. So we believe, with this company mainly present in these underpenetrated emerging value-added categories, we could see like a 15% CAGR in terms of sales, and even higher in terms of earnings of almost 30-35% CAGR.
I might add, these are all very well-developed businesses, right? It's only now that they're coming to the fore, but it's not as if they started 2 years ago or 3 years ago. Most of them have huge vintage in terms of being in that space and building the procurement chain. And it's only now that they're going to the market in a much more meaningful manner. It's also, I think, there's an element of timeliness in this, because it's now that the consumption patterns are also tending to shift. The infrastructure required to actually, keep them, sell them, distribute them, that's also coming in place. So I think it's a big, virtuous cycle that is coming in place. But, I think the starting point is the Indian milk industry is the largest in the world to start with. And on top of that, it has very high growth.
So as you said, the vintage has been there. These guys have been around. Their business models are established. Have they already been have they already been growing at growth rates that you're projecting? Because the market has been pretty large now for a long time, and it will grow. But have they already been capturing a lot of the sort of market over the last, say, 10, 15 years? Have you looked at that?
So as I said, they've already been growing at 15% CAGR consistently over many years. While there have been aberrations, when the milk prices have gone up, like the case was last year. However, as I was trying to explain you, if you draw an analogy just to the global market, so cheese in India is less than 1% of the milk industry. You compare with Europe, it's like 36% of the industry. So that itself explains how underpenetrated the categories are. So we believe there's a long way to go for these categories, and you could see like this kind of a growth for a long period of time.
Just one, we have to take a break. Out of this 5.5 lakh crores that you're talking about, liquid milk is worth what? It would be the majority.
It's 65% of the industry.
And the rest is value added.
The rest is value added, which is non-milk and non-SMP.
Okay, well, we have many more questions for you guys, especially on the consumption theme itself, Aditya, for you. But we'll take a short break. When we come back, we'll continue our discussion. Stay with us. Okay, we're discussing the dairy sector report, the big report which Edelweiss has come out with, and we're in conversation with Aditya Narayan and the author of the report, Shraddha Seth. Just one question before we dive straight into more stocks, really, Shraddha. What are the triggers, really? I mean, the market is big, it's growing, etc., etc. But what can these companies specifically do or are doing which will enable them to capture that value more significantly? So we believe there are certain success factors which have led to, these companies scaling up. So biggest being the direct procurement infrastructure. So a lot of these companies, say Heritage Foods, it has almost 95% direct procurement infrastructure. And, this is like a moat for them, which leads them to scale up. So they have grown at 20% CAGR in procurement. And at such a huge scale, 1 million procurement, they are now talking growing 3x from here. So it's mainly your farmers' trust which really helps in vertically integrating and, going to the next level. Okay. So that we believe is one big success factor for the companies. Okay, I want to talk about some individual stocks. We spoke about, a couple of them like Parag Milk. Hatsun Agro is the other one. It is one of the biggest players in Tamil Nadu, right, as far as dairy products are concerned. But these are stocks that have been well discovered. I mean, Hatsun Agro has gone from 250 to 900 in just 2 years. You think most of the juice or the milk is out of this stock, or is there more to go? So we believe rather than chasing the prices directionally, as I said, the industry is poised for a very healthy 15-20% CAGR. And if you compare it with the FMCG, a lot of categories have been well penetrated. Whereas out here, the organized space itself, huge categories like curd, ghee, it's less than, it's in single digit penetration. So we believe they will tend to move in line with the FMCG peers, more so for the capital efficient players like Heritage Foods, which have highest capital efficiency, 40% kind of ROCs. So we believe, as they keep growing at this kind of a run rate, valuations will tend to move in line. What do you think?
You see, I'll tell you, so you mentioned it's gone from 250 to 900. Yeah. So obviously there's been huge performance, right? But if you step back, if you see globally how milk companies, both procurers and more importantly those who actually market and sell them are traded, they trade in line with FMCGs, right? Which is what these companies are increasingly beginning to be benchmarked off. And I don't think that's unreal or not sustainable for the simple reason the growth rates are there, the return structures are relatively similar. And their business models, as I said, these companies have been around for a while. They become actually much, much more solid and much, much more stable. So I think the valuation framework is going to remain much, much higher. And so it's better to look at it in terms of where it is vis-a-vis an FMCG or how much it's moved in the very recent past, rather than to see a dramatic move. Because so you're saying now most of these companies will start to get valued as per big, large FMCG increasingly, that's how they are globally. There is no reason to suggest that won't be the case here because the return structures are similar, the growth rates are actually higher, and the switch that you actually see, growth rates will be higher because you'll see a lot moving from the unorganized into the value add space.
And that interesting analogy which Aditya pointed out, so globally the value-added dairy players trade in line with their FMCG peers. wherever in India, the value-added companies like Parag, they almost at a 40-50% discount to the FMCG median. Rightly so because of their capital-intensive nature. But as I said, they've already put in all their investments. And as you start seeing this yielding returns, we'll start seeing these discounts narrow.
Aditya, which is the stock that you are pushing most aggressively to funds in the space?
Within the space, Parag is our topic.
By far. And that is, I mean, even if you look at it near term, it's
absolutely.
Off the highs,
It's got a structural story, it's got an earnings story, and it's got an opportunity story. And I think they've got a decent their track record over the recent past has been pretty good. So
is it reasonably well owned amongst institutions sector or no?
So there is a fair bit of institutional holding as well. And even the promoter holding is almost like 50% odd. Yes, it is well covered institutionally, but we believe there is a further scope.
I think it's also well owned and well covered in that space that has looked in this space or looked at smaller stocks. I think its overall potential to actually go out to a wider audience is actually significant. So, within the audience that has been in this space, yes, it's well known and well recognized, and in cases well owned. But I think there is a much broader market that is sitting out there for it.
In fact, I wanted to get you in on Heritage Foods, which is the last stock that we're going to talk about, on this broader market, because earlier they were only present in southern India, but now I think they've made that acquisition of Reliance Dairy, and so they've broadened their reach. Will that increase scope of growth for them?
Definitely. So today they have a strong competitive regional moat, and as I said, with the scale of procurement, now they want to go pan-India. They have set a huge target of becoming a $1 billion company in the next 4 to 5 years. This definitely is straddling across the product categories. For these companies, as they take the inorganic way, it gets easier to scale up, and go to the next level. And going into the value-added categories, take them pan-India. So that is definitely the theme.
Okay, well...
clearly with them, they have a regional bias in how they've grown up, right? But increasingly, particularly as they put their products in place, they are going to go more national.
All right, guys, thanks so much. And I can't hold my puns back. So I hope investors milk a lot of returns from all of these stocks. Thanks for enlightening us with this very good report and detailed report on the sector.
43 points lower on the Nifty. We're at about 10,279 odd. Future still at about a 21 odd point premium. It's been down and out. There is some 10-point recovery from the last 20 minutes or so, but it isn't saying very much. The trend has been one of profit taking through the course of the day. We of course have been discussing the factors at play now for the last couple of hours that trade has been on. We are going to wrap up this edition of Trading Hour here. From Sonia and me, everyone on the show, thanks very much for watching. Halftime report comes right up.